Sydney and Melbourne house prices are officially dropping, but does that mean that you should stop investing in property, or does it mean that you should look to other areas, especially regional areas across Australia? In this video, I'll be sharing for you the outlook of regional Victoria. Okay, different cities, regional Victoria, and sharing with you exact percentages of how much they will grow, not just in the next 6 months, but how much they're likely to grow in the next 2 to 3 years. Okay, so you can get short-term equity. If you're interested, continue watching. My name is PK, and I help people build passive income through the Property Investment Accelerator mentorship program using data without needing a $15,000 buyer's agent every single purchase. In this channel, we talk about 3 things. Number 1, global local economy. We talk about number 2, property investing, and number 3, financial happiness. If you're interested in one of these 3, smash that subscribe button and give this video a thumbs up. Let's get into it. Okay, so this chart or this report is sponsored by QBE, the insurance company, and is authored by Biz Shrapnel, Oxford Economics. So it's not like one of those dodgy reports you see from the big 4 banks or the economists from, one of these banks saying prices are going to drop by 20% or boom by 20%. It's always boom or bust with them. This is actually more academic research. It's based on more, in my honest and humble opinion, just better intelligence. Okay, it's not there with an agenda necessarily, so to speak. It's done by research houses. So buying in Sydney, Melbourne is a fool's paradise at this point in the cycle. Of course, buy anywhere in Australia, blindfolded almost, hold it for 30 years, it does well. But as property investors, we know we want those short-term gains so we can take equity and build a portfolio. So where do you get them? You definitely don't get those gains in Sydney or Melbourne. Here's one example, right? So Sydney, according to Biz Shrapnel, Oxford Economics, Sydney in 2022 is likely to rise by 8%, and then it's likely to just flatline. Okay, so it's a balanced view. It's not like one of these banks coming out and say it's going to go up 20%, then drop for the next 2 years by 10%. This is a balanced view, which is something I like. But do you really want to be investing in an area that is, we're partway through 2022, this dark purple line that has only got this much to rise in the next 3 years? Like, do you really want to be doing that? Okay, and same with unit prices. I mean, unit prices have got more upside because of the divergence between unit prices and house prices. Plus, over the long term, unit prices, we know units don't perform as well as houses. So let's not get, wrapped up with short-term emotions and make a long-term decision out of that. Don't make a long-term decision based on a short-term emotion. Okay, property investing advice number 1. So you can see even these surrounding areas like Newcastle, Wollongong, 2022, 2023, 2024, 2, 3, 4, they don't have much left in the tank. All right, so Sydney and Melbourne, it's a fool's paradise to invest in this point of the cycle. Now, I promised you to talk about regional Victoria, and that's what I'm going to do. Let's just go, I'm not going to go through every single town or city. We've done a lot of buying in a whole bunch of towns and cities in regional Victoria, but we go through the top ones at least. So Ballarat, okay? And, you guys are scared of investing in regional. I know you are. You still are scared of it. Let me try to educate you about what's actually going on in these areas. So Ballarat, so saying Ballarat benefits from the proximity to Melbourne, with the city offering a viable commuting option to Melbourne via road and rail. It's not a one-town pony or one industry town. Health, education, retail, and agriculture are the biggest employers, okay? And it's one of several regional centres that have outperformed Melbourne in the recent history. In fact, since the last 5 years, it's outperformed Melbourne. That's pre-COVID as well. Okay, so obviously it benefited from the home builder grant and all that kind of thing, which basically everywhere else has, okay? And it's got a really favorable local economy. Okay, let's go into that a little bit more. So there's proposed infrastructure improvements to further reduce the travel time between Melbourne and in Ballarat, which will help draw out demand. Remember, when it comes to infrastructure, there's only two things that are important: improvement of accessibility, get you from A to B, and improvement of employment. That's helping. There's a deep major project pipeline, work to start on a $460 million plus Ballarat base hospital redevelopment and a $70 million hospital upgrade here. So the whole idea is that, I've talked about this in a recent video as well. When healthcare workers are more in demand, these are high-paying, stable jobs that are counter-cyclical. I should say there is no volatility. Everyone always needs medical health, especially in an aging population, which we know in the next 5-10 years, a record number of people are going to retire and need that kind of thing. Okay, so I promised you exact numbers. Of course, can't hang my hat on this, but this is what Oxford and Biz Shrapnel is saying. Median house prices in Ballarat forecast to reach 608,000 as of middle of 2024. Okay, so in just over 2 years' time, a rise of 17% in basically just over 2 years, or close to 3 years. So that's pretty good going, right? And it's much better going than Sydney or Melbourne. Next one, Geelong. Geelong's population growth is amongst the strongest in the nation. Who would have thought? Everyone thinks that Melbourne and Sydney is where the population rises more than anything else. Wrong. Okay, despite the loss of car manufacturing, I think it was the Holden plant. So internal and overseas migration is expected to rise, and residential construction has trended firmly upwards over the decade. More and more people are wanting to live in Geelong as opposed to Melbourne. It's just a much nicer place to live than places like Melton or even like Werribee. This is next to the ocean, which is something that has got a lot of appeal. What's the outlook? This is the most important thing. All signs point to an elevated population growth holding for the region. So it's not like the people who moved to Geelong from Melbourne because they could work from home are now going to go back to Melbourne. The data is not suggesting that. Geelong's affordability advantage over Melbourne is expected to continue to draw population from Melbourne, especially with first home buyers. And we know that in the budget there's been a whole bunch of announcements around that. And the next thing is total growth in Geelong's median house price to middle of 2024 expected is slightly lower than of Melbourne. I personally disagree with that, but what they are saying is that it will increase by about 18% in the next 2 or 3 years. So in my estimation, Geelong will do much better than that, just because of the supply pipeline in Melbourne is quite large, especially in the western suburbs. But here it is. That's the outlook. And the last one we'll cover in this video. Guys, give it a subscribe, give it a like if this is kind of bringing you value. Bendigo's greater distance from Melbourne to that of Geelong and Ballarat makes it less viable for commuters. That is true. There's not many people driving to Melbourne from Bendigo every day. That doesn't happen. So it's more about the local or surrounding economy. How is that looking? How's that tracking? But with the price gap between regional locations in Melbourne tempting many to move in light of property market uncertainty, Bendigo's median house price has outperformed Melbourne, not just in 2021, 2022 start, but also in 2017, 2018, 2019. Once again, Melbourne has underperformed these regional areas, not just in the COVID period, but in the last 5 years. I'm just trying to demonstrate that this regional boom phenomenon is not just because of COVID. So government stimulus measures, low interest rates will drag out the home buyer demand. We heard that in the budget recently with more schemes announced. Construction activity in non-residential major projects in Bendigo, while significantly lower than Geelong or Ballarat, has steadily trended up in recent years. This is an incredibly important point. We don't want to see major upticks in construction activity in residential because that means supply is rising. When supply is the enemy of price growth in residential supply demand. But this is for non-residential commercial projects. That is what draws population. That is what increases the amenity, the infrastructure, the employability of the local population. So approximately 275 million works commenced in 2020, 2021, including the Bendigo Law Court development, Bendigo Gov Hub. And they're saying that in a couple of years or just over a couple of years' time from now, Bendigo house prices are expected to be close to 600, representing almost 20% rise versus, the most comparable year. So like the idea of this video was to say, if you're a property investor and you're saying, I don't want to be negatively geared and I don't want to buy at the top of the cycle, then that logic equals don't invest in Melbourne, Sydney. But that logic does not equal don't invest anywhere. Okay, it equals invest in regional areas. Now, are these the best regional areas to invest in? Arguably not. In fact, I can tell you categorically, we're not investing in any of these right now. We were in the last 5 years, but not anymore. But in the next video, I'll take you through one of our favorite playgrounds, regional Queensland. Okay, and those are some areas that we are investing. I'll talk about the major projects of places like Toowoomba, Bundaberg, Townsville, some other places. It's not that you can just blindfold and pick anywhere. You have to be very, very careful in regional Queensland. There's a whole bunch of gotchas that in a way that there aren't in regional Victoria. But if you want that video, leave a yes below, YES below. If I get enough yeses, let's say 20 yeses, then I'll create that video. And, I'm going to talk about deep dive on some of these regional areas and just really slam home the point that you can make 20, 30, 40, 50% capital gains in the next 3 years, in the next 4 years, if you know where to buy. And I'll talk you through that. Okay, guys, if this brought you value, hit the subscribe button, give this video a thumbs up, and leave a yes below if you want a deep dive on regional Queensland. Okay, my name's PK. Level up your knowledge, your education. Podcast below, free of cost. Facebook group, more than 13,000 people. We have these discussions, suburb deep dives in there all the time. Join below, link below, and obviously a link to the Property Investment Accelerator mentorship program if you really seriously wanted to level up. My name's PK. Catch you later. Bye.